Good morning. Welcome to the BYU Real Estate Webinar Series. My name is Barrett Slade, Professor of Finance and the host of today's webinar. Before I introduce our speaker, I'd like to announce that on October 21st, I'll be hosting Wes Whitman of Whitman Peterson and Ben Leahy of Cedar Capital Partners. Their presentation is titled Investing in the Great Outdoors, from Auto Camp to Sundance. Sounds like a fun and interesting topic, and we'll be sending out an invitation to that webinar in the coming days. Please note that after our guest speaker concludes at 11:35 a.m. Mountain Daylight Time, we'll have about 10 minutes for Q&A, and then we'll conclude at 11:45 a.m. If you have questions for the speaker, please click on the Q&A button at the bottom of your screen and type those in. So today we have with us Mr. Don Sleight, who recently retired as President and Chief Executive Officer of Farmland Reserve, Inc. and AgReserves, Inc. These two entities own and operate the investment farms and ranches affiliated with the Church of Jesus Christ of Latter-day Saints. Don, it's great to have you with us today. Thanks so much for taking time out of the schedule to come and teach us a little bit about AgReserves and farmland reserves and a little bit about investing in farm and ag properties. So go ahead and take it away.
Okay, thank you. I know we talked a little bit before we came on about why the church would invest in farm and ranch land in the first place. I will tell you that I think they made their first investment in ranch land in Alberta, Canada in 1948. Okay. That was not a welfare farm per se, but rather an investment. Probably the investment that's most known to members of the church is the ranch in Central Florida, and which they continue to own. That initial acquisition was made just over 70 years ago. So they've been very long-term holders of land. A number of years ago, the church decided that they would tighten their belt and save a little bit each year in what they called a rainy day fund. And they have invested that fund in stocks and bonds, commercial real estate, and in agricultural land, with the agricultural land being both a real estate investment, and President Hinckley at the time said that it also had the capability to produce food in a time of need. And so, like I say, they've tried to keep a percentage of the investment. I think as we talk about agriculture as an investment today, it'll become clear why that might fit in an investment portfolio. So I titled today's presentation, All Acres Are Not Created Equal. For those of you who invest in urban land, and I said, buy an acre in Singapore and see what that's worth, or buy an acre in Wyoming and see what that's worth, not in the pretty part of Wyoming, but in the more basic desert parts of Wyoming. So instead of talking about millions of dollars per acre, you might be talking about hundreds of dollars per acre. So, and then we're going to talk about various types of agricultural land and their relative value. So if you think about ag land as an investment, it has had over a long period of time pretty good land appreciation, and it is relatively it has relatively little volatility to it. It does not move as aggressively either up or down as, say, a stock market would. And so that makes it, and it doesn't move necessarily with the stock market. And so when you're trying to diversify, that has something to do with it. You generally get conservative cash flows from rent or from operations. And you need to think about ag land as a long-term investment. And I said in the presentation here, 10 years is not long-term. I think 10 years can be long-term if you happen to catch the market at the end of the 10 years during an up time for the market. You may say, great time to get out. But it's an investment where if you pick your spots in and out of it, you can actually do quite well. Just to illustrate that, over the last 80 years, if you look at Illinois and Iowa farmland, they've both appreciated about 5.9% annually, and that's on a compound rate. Over the last 15 years, you'll see that U.S. cropland as a whole has been a little lower than that at 3.9%. I will tell you, however, that we have just seen a burst of land appreciation just within the last year. And I suppose if you wind up including 2021 in that data set, that number will have moved up.
Now, I understand that some of that is China's demand for U.S. commodities?
It is, and I will mention this later, but I'll just tell you right now that agriculture has a tendency to do well when the dollar's weak. The United States is the biggest exporter of agricultural products in the world, and China is one of the biggest buyers. And so right now, China has been buying soybeans and corn at a fairly great rate, and that supports the price in the United States, and it supports the land values, frankly. So one of the little tests you can take for yourself if you're watching this webinar today is you can try and guess what crop you're looking at on each of these slides. And somebody earlier suggested this was dandelions, but this is actually what we would call in the United States canola. And in the UK, where this picture was taken, they would refer to it as industrial rapeseed. There are various ways to invest in agriculture, but if you think about how most of you might look at it, you would probably want to look at it as a passive investment where you buy the farmland and then you lease it to a third party. Investors that have done this type of thing include Farmland Reserve, where I was the president and CEO, but also the Harvard Endowment Fund, and TIA, which at one time was known as TIA CREF. And they really got into the ag investment area by buying a group called the Westchester Group, which is a group of people that we've known for a long time. Then another passive group of investors are Midwestern widows. There are many people who have, where perhaps the husband has died and the family no longer directly operates the farm, but they lease it to a neighbor. And so there's a fair amount of farmland, a fairly large amount of farmland held in that type of a situation. And by leasing it to neighbors, their neighbors are then able to scale up enough that they can run a direct operation and afford to utilize the size of equipment and the expensive type of equipment it takes to farm today. And my advice to ag investors is don't try to farm it yourself unless you're an experienced operator. Put another way, don't try this at home. This is not a good place. And contrary to what some have said in the past, I doubt that you can teach everyone to farm, at least with modern farming techniques. So I like to use this map. This map, every dot that you see represents 25,000 acres of what's called prime farmland. And if you want the simple definition of prime farmland, it's land with good enough soil and sufficient water to grow a good crop for whatever the crop is in that region of the world. And so if you look at the United States and you see where the green dots are, they're heavily to the Midwestern United States. The area that appears as white on this map, and depending on the region of the country, will probably either be in cattle ranches or in forest, plantation pines or forests. And the gray areas are gray if 95% or more of the land inside that gray area is owned by the federal government. And so if you look for privately owned ranch land, you can kind of see the area that might be in, and that would include Florida, surprisingly. Some people don't think about that, but that is one of the largest cow-calf operating states in the United States. So now there are some states that have anti-corporate farming laws, and they only allow individual ownership of farmland. And so when you look at institutional investors, they're not in those states. When you say, well, it's 9 states, what you'll notice about those 9 states is most of them are in the Midwest. When you impose the outline of those states on that map I just showed you, all of a sudden you see a whole bunch of the green dots, or a whole bunch of the prime farmland is located in states where you can't have corporate ownership of the land. When you look at what institutional investors have done over the past couple of decades, they've probably invested more heavily in Illinois, Indiana, and increasingly over the last decade or two in Arkansas, Mississippi, and maybe into Louisiana. Now, there are pros and cons to each of those states. One of the pros of Illinois and Indiana are that you get sufficient rainfall to grow a good crop almost every year, and you have a very competitive market of people who will want to rent your land. As you go further south, you can buy 2 acres in Arkansas for what 1 acre will cost you in Illinois. You'll get a little more rent off the 2 acres than you would off the 1. You may have to irrigate it, however, and your pool of potential renters is much smaller. And so you may get a little higher return there, but you're also accepting a little more risk as you go down there. And so as Farmland Reserve, we had a tendency to stay further north. We had a tendency to stay more in Illinois, Indiana, or that type of state. Now, wherever you invest in farmland, you need to think about a couple of things. And one of them is, what's your water source? If it's non-irrigated land, if it's places where God takes care of the irrigation, you want to know what the annual precipitation will be like. And you particularly want to know what kind of precipitation you're going to get during the growing season. And then you have to couple that with the water holding capacity of the soil. I think most of us inherently know that sands just seem to be drier than loamy soils or clay soils, but you may want a sandy soil. I remember I took the presiding bishopric of the church up to look at a farm in Oregon one time, and one of them said, "This looks pretty sandy." And I said, "I know, it's just perfect." And it is just perfect when we could stand center pivot irrigation systems on it and irrigate it every day if we needed to. And with the sandy soil, it allowed the tubers on the potatoes to get bigger than they would in a heavier soil. And so, but if you're going to be non-irrigated, that sandy soil is a great danger to you. On the other hand, if you're looking at irrigated agricultural land, you want to know the reliability of the water source, and you want to know the quality of the water. Now, I will tell you generally that the great irrigation source in the United States for many, many years was the Ogallala Aquifer in the Midwest, really western Nebraska down through Kansas and into Texas. But it has been oversubscribed, and what they've seen over time is that the water level in the aquifer is dropping. Mm-hmm. And so they're having to take great measures and scale back the amount of irrigation that's done there. And when the water starts to disappear, the land value does too. And so that's being managed. Probably one of the most reliable irrigation water sources in the United States is the Columbia Snake River system. And the mighty Columbia River has a lot of water in it. And the Snake has an adequate amount, but it's probably also a little bit oversubscribed. And they're having to do some things and adjudicate water rights down through the Snake River Valley of Idaho to make sure that those who had the earlier claims on the water get sufficient for what they need.
Let me maybe just stop you there on how about the aquifers in Arizona as well as the San Joaquin area, some of those really
most of them are being drawn down, and they may have many years to go before they're drawn down to where you can't irrigate, but they're on a downward trend mostly. Part of the United States where you can get irrigation water and it's fairly reliable most of the time, but maybe not this year, is Northern California. Southern California is a lot more perilous, but it's also the state where you grow really high value crops, which we'll discuss a little bit more in just a minute. And so there's a good reason to be there and to irrigate. So if you look at how you're going to use agricultural land and say, where is the risk? The lowest risk investment you can make in farmland is probably in leased farmland. And I would say in those Midwest states where you've got sufficient rainfall almost every year to grow a crop. Ranch land is just a little more risky. You can buy ranch land at a per acre cost that's pretty low. Ranches are fairly steady, but, and then as you go to row crop ground that you're farming yourself, you get a little more profitable than that. And then finally, if you have permanent plantings like tree crops, those are the places where you probably earn the highest return. But what you're also doing is you're accepting greater risk as you work your way across this listing of cropland types that I have there. If you look just at cash flow off those types of properties, ranch land probably will be the lowest in cash flow. Right behind that's leased farmland, and then you get to row crops and finally to permanent plantings. Again, you always need to remind yourself that as you move across those categories, you're accepting more and more risk. When you've got trees on the property, and if you have a killing freeze, your investment, a big portion of your investment disappears. When you have a cornfield in Iowa or Illinois and it freezes, the crop probably is almost made by the time it's there. You'll still harvest that crop and you'll come back the next spring and plant another. And so you've got lots less risk in that type of a situation. Now, if you're farming in California and you're in a drought like they've been having, then you get in a situation of whether you're going to have enough water to irrigate. And what you'll see is farmers who are growing high value crops will begin to try to buy water from people who are growing lower value crops to keep their trees alive, for instance. So I talked a little bit, I just mentioned investment diversification. And generally, farming returns are not highly correlated with other investments like the stock market. In fact, I would say that farmland has a tendency to do well when other parts of the economy aren't doing as well, as I mentioned. So this allows for portfolio diversification if you're trying to get more uniform performance out of your portfolio. And US farming has a tendency to do well when the dollar weakens and US products become more competitive in the world markets. That is obviously happening right now, and there's been a huge outflow of exports from the United States this past year. The United States year in and year out is probably, no, not probably, it is certainly the largest exporter of agricultural goods in the world by a wide margin. Just for reference, the number 2 country is the Netherlands.
Wow.
And the Netherlands is number 2, and they grow some crops there, but they also import things and then re-export them too. And so the United States is really the big player. And when you got down to basic crops that would sustain life like wheat, you may be looking at the United States, Canada, Australia, Argentina, and Ukraine. Those would be the ones that are producing enough of that kind of a commodity that they can also export it somewhere else. Now, I'm talking about exporting. The biggest producers of agricultural products in the world are actually China and India, but they also have these giant populations that they've got to feed, so they don't export nearly as much. And like I said before, the United States is the largest exporter by quite a wide margin. I think that number has a tendency to be in the $140 to $150 billion a year worth of ag commodities that are exported.
So a question with regards to China and how they've come back so strong with their technology and so many other things that they're now so competitive with. Are they starting to be a larger player in the ag space over time to where they could not only feed their population, but also be a significant exporter like the U.S.?
Well, they're getting better at agriculture, but their limiting factor is water. The amount of water where they can irrigate and the amount of land that actually receives sufficient rainfall to grow crops on. And so they're somewhat limited. And so with that water, they have a tendency to grow higher value crops where they can. They may grow tree nuts, or they may grow apples, or they may, they'll grow the higher value crops. And then on these lower value crops, they have a tendency to import those. Okay. So some other things you need to think about if you're going to invest in farmland is there change of use potential in it? Almost all the time when you look at farmland as change of use potential, the market has already begun to price it upward. And when I was with Farmland Reserve, when they bought the land in Central Florida, I think they paid a little bit more than $25 an acre for it in the 1950s. It is worth somewhat more than that now, but that's after a 70-year hold. And there are just the very first homes being built on the edge of the ranch now, as Orlando has expanded out to it. And of course, the Orlando airport is just west of that ranch land. And so by being a very long-term investor, then they have had some opportunities to see land values affected by this change of use. Another thing you need to think about as you invest in farmland, and maybe it's always to think ahead to the end at the beginning, is who would buy this from you if you wanted to sell it at some point. We have gone through a period, and I would say over the last 20 to 30 years, and I could say this more delicately, but ranches have been playgrounds for rich people. There have been a lot of ranches that have been purchased as recreational properties, frankly. Ted Turner was heavily involved in this, his friend Jack Malone, and I think Stan Kroenke. I think Kroenke owns the Los Angeles Rams and maybe the St. Louis Blues. And I think he married one of Sam Walton's daughters. And so he has bought some big ranches. This next generation of investors seems a little less interested in ranches as recreational properties. Now they want to build a spaceship. So I don't know what the long-term, if you looked at ranches over 20 years, though, they've actually appreciated in value a little bit faster than farmland in general. So I don't know how long that will be sustained, but you need to be thinking about who would buy this if I wanted to sell it. Along with that, you need to think about illiquidity. For instance, I can put farmland on the market and I might sell it very quickly, or I might sell it several years from now. And you have to ask yourself, do I have the resources to wait? Do I have the resources to wait if it's a really bad time in the market? Can I wait several years until the market improves? And so that is an important question that every investor needs to ask themselves. And property taxes vary quite a bit from state to state. Our observation in the Midwest is that Illinois has the highest property taxes on ag land of any of the states in the Midwest. And so you need to factor that into your analysis when you're looking at what kind of a return you can get from it. And then you need to think about the security of the property. Many years ago, I was running a farm called AgReserves up in Southeast Washington, and we had a group of Russian food processors visit the farm. They were being hosted by the potato processor that we work with up there. One of those food processors asked me how much security we have on the farm. And I said, well, a minimal number. And in those days, the farm was about 45 or 50,000 irrigated acres. And I said, well, we have a minimal number. He said, well, what's a minimal number? I said, well, we have one guy who actually mechanics at night, but keeps his eyes open. And we have some night irrigators out there in the summer, you know, who are just checking to see that the irrigation system works. He told me at the time that if they were to leave a combine in the field overnight in Russia, it would be gone the next day. And so depending on where you are in the world, you do need to think about security when you make investments in agriculture.
Security of the personal property, but also of the crop at all? Is there any concern about the crop?
There is, and the higher value of the crop, the more likely somebody will come and take something. And you know, they're probably not going to hurt you too hard, but they will come on the property. One of the things that was popular in the Northwest a few years ago was to go out onto center pivot irrigation systems and steal the wiring off them, because they were copper wiring, and they could take it and sell the copper wiring to support their meth habit. So, you know, you always need to think about security. One of the reasons I would say I like the upper Midwest is those are good, solid citizen farmers, you know, many of them of German descent, but lots of Northern European kind of thinking about, you know, just really upright people. And I feel pretty secure, you know, in a market like that. There are some places where we've farmed internationally where I have felt less secure. And if you're going to be like that, then you should expect a higher rate of return to justify taking that kind of risk. So honestly, if you were to look at this in summary, you'd say that agricultural land has been and probably is a safe long-term investment. It is, however, not a category that most people have attempted to do it. There are an increasing number of groups out there that are trying to put together portfolios of ag land that you can invest in, just so that you're diversifying that portfolio. And when you take the combination of land rent and land appreciation, it's a pretty stable investment. If you're trying sometimes to make a living on a small piece of farmland, it's very difficult to do it. But if you're leasing it to somebody who's aggregating quite a bit of land that they're leasing in addition to some that perhaps they own, they can farm it profitably and you can earn a modest return and then capture that land appreciation at the same time.
So speak to tech just a minute as far as the scale, and is tech going to increase the yield and reduce the costs and make the returns a little more?
Yeah, well, here's an interesting thing. From the 1860s until about 1940, the average corn yield per acre ran somewhere in the 20 to 30 bushels per acre area. And then began what was labeled the Green Revolution. And what you got was your first man-made herbicides, 2,4-D, and you got the very first hybrid varieties of crops. And with that, from 1940 into about 1970, corn yields went from 30 bushels per acre to about 110. Wow. And then someone decided the Green Revolution was over and declared it over. And yet since then, and that was probably in the early 80s, since then, the average corn yield has gone from that 110 up to about 170 to 175. And the area of the United States in which you will grow corn because you can get a crop has expanded, not because of climate change, but because they've bred shorter and shorter season varieties that will still produce at a high level. And so corn production has crept into the Dakotas, for instance, or into Minnesota, where traditionally they may have been growing wheat, but they can now grow corn. And so, you know, the technology is continuing to increase yields per acre. And the amount of technology that exists on a farm at this point is really quite staggering. You know, if you look at the ability to control irrigation systems and to apply chemicals through the irrigation system, when you look at yield monitoring so that you can tell what parts of your field are producing well and which are not. In fact, I would say in general that the technology is probably ahead of the underlying agronomy. We can identify very clearly where the low and the high yielding parts of a field are, but we don't know what to do from there. If it's low yielding, do you throw inputs at it to raise the yield? Or do you say that won't do any good and I'm going to stop putting as many inputs on it and put it where they will do good? And so we're actually in a place where technology is getting ahead of the fundamental science of agriculture right now. Unfortunately, you're not seeing as many people or as many entities, the land grant universities, et cetera, willing to invest in that basic applied technology. It doesn't generate a lot of publishable papers in scientific journals. So again, I remind you that risk depends on farmland type and what you're going to use that land for. And the more intensely it's going to be farmed, the more risk you're taking. So you should just remember that. And if you, you know, sometimes irrigation reduces risk a great deal, and sometimes it adds risk if your water supply is not reliable. The risk also the returns also vary by that. So as you take more risk, you've got to have more return to justify it. And risk really increases when you have a perennial crop or a multi-year crop like an orchard, you know, because if you lose that crop, if you lose trees, then you're years away from another crop. And then I would say to all of you out there who've decided that this looks like a great category and you should invest, consider taking a passive position, consider buying it and renting it and not running it yourself unless you're already an experienced operator. And I guess that would kind of summarize what I have to say today.
Well, excellent. Let's go to questions from the audience. Let me pull these up and see what we have. That was very interesting, Don. Thanks so much. Here we have a first question. With long time periods, how do you plan for changes in weather patterns?
Well, you know what, weather, even though we're spending a lot of time worrying about climate change right now, weather patterns don't change very fast. If anything, some data that I saw recently said that in areas of the country where last August or August was warmer than it has been on the 100-year average, that it's also, for much of it, it's also warmer and moister, which probably says you've just got better agricultural opportunities out of it. So, you know, I think when we talk about climate change, we're talking about really long, slow changes, and I think that they're manageable probably.
Okay, interesting. Thank you. Other than that, that it's pretty silent. Let's see. Here's one. What are the typical returns in terms of unlevered IRRs?
Okay. Let's buy an acre of land, let's say in central Illinois, some of the nicest farmland in the United States. Your rent, by the time you take the expenses of managing the property out, you can really only expect in today's market to earn 2.5% to 3% return on what the market value of the property is. That's why I say it's pretty modest. Mm-hmm. But you couple that with, you know, 3.5% to 5.5% to 6% land appreciation, then you're okay. You know, it's a reasonable investment. Working within the portfolio that I've been working, the stock and bond guy said, every time Don brings in a ranch, I want to say, yes, buy it. You know, the return's modest, but it's very stable. So he feels like there's a place in the portfolio for this type of thing. But if you think this is where you're going to get rich, probably not.
Right. Interesting. Okay. Here's one. Other than the US, where could investors look to invest in ag?
Well, I can tell you where I have a little bit of experience. You know, we have been invested in Canada, in Mexico, in Chile, Brazil, Argentina, and the United Kingdom. I've asked that question of the people at John Deere. I said, okay, if you had money to invest, where would you do it? And they said, for all of the craziness of the governments of some of these countries, they said, we would still look hard at Brazil and Argentina. If I were going to do that, neither one of them really strike you as the most stable of countries. I would say Brazil right now is a little more stable than Argentina is, though. There are some remarkable farm resources, agricultural resources in Argentina. When I first visited Argentina, I said to the people I was traveling with, we should own 100,000 acres here. When I saw how things worked, I said, we should be on the next plane out of here. So the truth is somewhere in between those. Right. I think most investors in general are very leery of Argentina right now, but they do have some of the best soils in the world there.
Interesting. Great, thank you. How does ag land do as an inflation hedge? What's your thoughts in that regard?
And that's actually one of the reasons it's good in the portfolio, is it has a tendency to slightly outperform inflation. You know, like I said, when you look at long history and you earn 5 or 6%, if you looked at the long history of inflation, that's probably outperforming it. Some of what happens is, you know, when I was younger, I remember for years and years, it seemed like you sold $2 a bushel corn. And there was a run up when the Renewable Fuel Standards Act was passed, because with the stroke of a pen, the government created new demand for 40% of the US corn crop, and corn prices shot up. And then the market sort of adjusted to what was going on there, and corn prices fell back, but they didn't fall back to $2. They fell back to $4. And so you kind of think about $4 corn now.
Interesting.
This year, we've had a pretty extended period of time where you could sell corn above $5, even up close to $6. It is falling back now, and it always falls back near harvest time. But will it go all the way back to $4? I don't know the answer to that, you know, but it has a tendency to move up pretty sharply, fall back, but not as far back as it was originally.
Okay, excellent. Speak a little bit to ranches, compare and contrast ranch investing a little more compared with ag. You know, the church, of course, has the large ranch, Deseret ranches,
Yeah.
and what's your perspective on that? Talk a little more about comparing those two assets.
Well, over history, we were kind of a cowy company. We have a lot of cows, and I think that, you know, in the United States, there's certainly a movement against meat,
Beef, yeah.
in some circles. The world demand for meat and protein is doing nothing but improving. And what we normally see is, as a country becomes more self-sufficient, as their standard of living improves, one of the first things they do is put more protein in their diet. And whether that's from chicken, or whether that's from pork, or whether that's from beef, they will move to do that. I heard a gentleman who'd been with the World Bank many years ago spoke to a seminar I was at, and he said, we really thought that potato production would decline as nations of the earth became wealthier. He said, what we failed to understand was the power of French fries.
Interesting.
And that people like their French fries.
Right.
And with an increasing demand for them. And the Asian market, for instance, really, the Asians don't particularly understand mashed potatoes very much. That doesn't ring very true to them, but they really like French fries.
Interesting. Thank you. Can you talk about infrastructure and its value on farm property? You know, wells, power, roads, structures, how that influences your buying decisions.
Yeah, part of the reason that the category gets riskier as you go across those farmland types is the amount of infrastructure you have to put on them. You know, if I buy a piece of farm ground in the Midwest and just lease it out, I don't have to have hardly any infrastructure. And so I've made almost 100% land investment. If I buy a piece of orchard ground in the Central Valley of California, I have a lot of money tied up in stuff that would be considered more personal property or depreciable assets there. And so I've got to have a higher return on it, because over time they're going to disappear. I may have an almond tree and it's in production at 3 years old, but at 18 years old, it's getting near the end of its cycle, and I've got to pull it out and put a new tree in. And so, you know, just the amount that you have to invest in infrastructure and production capacity goes up as you move to those riskier categories.
Interesting. Is the real money in farming or in land speculation, hoping that seas will move in your direction?
Well, when you have $4 almonds, it's in the production. And when you don't have $4 almonds, it's in the land appreciation. One of the things that probably introduces a bunch of uncertainty into the market right now is that California's had a couple of droughts in the last decade, and they're moving to manage their aquifers. Their water rights issues they weren't nearly as well developed in their thought process on how they were going to manage water in an aquifer or in a river. And so they're going through that process right now. And, you know, anytime you go into a regulatory mode like that, you don't know what's going to come out the other end of it. And so I think, you know, there is a certain amount of risk in investing in those areas right now because of that. I will say, however, that the Central Valley of California produces a big portion of the world's almond crop, you know, and an almond is a nut that people like, not just as an ingredient in foods, but they like it as a snack nut.
Yeah. Yeah.
And so, you know, there's some money to be had in those crops, but they're always the one, if you're a bushel short of how many almonds the world wants, you get a great price for them. And if you're a bushel long, you get a terrible price for them. There's quite a bit of elasticity, you know, price elasticity in some of these crops.
Interesting.
And again, that's another of those risk factors.
Right, right. Here's a question. With regards to lease rates, what are the typical lease rates for land in the Midwest?
Well, I think right now, if you were in Illinois, you could probably get anywhere from $300 to $350 an acre, something like that. And we've thought when you had a $10,000 an acre, that probably gave us our conservative return. Now, if land's going to sell for $12,000 an acre, we'll rent shift. There are some leases done where they say, okay, what's the average yield off this property in corn? What's the price of corn? And you maybe price that off the futures market in a certain month. And when you price it that way, that farmer can go and sell that crop into that market right then if he chooses to. And you take a percentage of the crop. And so you can have rents that adjust when you set up things like that and you're not caught. But probably most of the land in the Midwest is still year-to-year leases.
Yes, are they? Okay. Here's one. Are there changes on the horizon for non-corporate landowner states? Could they legalize corporate ownership? Is there any movement to allow more corporate ownership?
Well, there's actually a lot of conversation in those states that if they were ever challenged, those laws may not be found to be constitutional. Very seldom would you find a corporation that wants to be the one that tests that, though.
Right, right. Driving out the small farmer or whatever.
Yeah. But I will say something like this. You know, Bill Gates has had quite a bit of publicity lately because he's become a big farmland owner, supposedly. It's reported that he owns about 240,000 acres. Well, for perspective, there's about 900 million acres of ag land in the United States. And he's the biggest private individual landowner at 240,000 acres. So he's nothing. He's a fraction of 1%. These are giant markets. So
interesting. Well, we're running out of time. We're so appreciative of you coming and sharing with us. I'd like you to speak to our students. We have students who are part of the call today. And from your perspective, are there any career opportunities that you would think that would be quite interesting, dynamic for our business school students in this particular area of ag and ag investing?
Well, I think if you look at the ag space, there's ways to make a living in ag production. There are certainly ways of making a living in managing land as you transition ag land into something different with change of uses. There are places to manage these portfolios and put these portfolios together. I know we have a former employee of Farmland Reserve who has left and joined a company that is putting that together and trying to get it at a scale where maybe someone who in the past couldn't see a way to invest in agriculture because of the large dollar amounts that it required, that they can put smaller amounts into a fund like that and be invested in it and diversify their portfolio. So I think that there are many, many more institutions who are looking at agriculture as a portion of a portfolio to have their investment in. And so I think probably the opportunities are better than they've ever been. When I came out, and that's over 40 years ago now, I did it because I loved agriculture. I didn't want to live in a city. I made a lifestyle decision. You know, now it doesn't have to be just a lifestyle decision. It can be an economic decision for you, where you say, this is something I'd like to do and I can make a decent living at it.
Something that the young people ought to keep on their radar,
Yeah.
agribusiness, and
Yeah. And
applying their business management skills and their business
well, and
skills
that's
in
right. And
business.
being a good analyst matters when you're analyzing a land investment as much as it
Right.
does when you're, you know, thinking about other types of investments.
Sounds good. Don, thank you so much.
You're
This has
welcome.
been very interesting, a little unique to some of the traditional avenues of investing. So to all of you who have joined us today, thanks so much for joining us. We look forward to seeing you in 2 weeks, where we'll learn more about investing in the great outdoors. Have a wonderful afternoon.